FM 590 AM WCAB Rutherford.
I'm Brian Clark. Officials in Ukraine. This is what.
How's that?
Hook up your microphone, okay?
Can we start with the Morse code signal again? No? This is live radio at its finest. Right here, folks. Live radio at its finest. Tom was feverishly engineering, trying to figure out why I wasn't on the air, and we had a microphone problem. Namely, we didn't have a microphone. But we're okay. This is live radio. Did I mention that already 2 or 3 times? Those of you live streaming us, www.wcab59.com. You're watching us live. And I'm getting feedback. I'm getting feedback somewhere. Oh, I know where I'm getting feedback. Hold on a second. Feedback is gone, Tom. Maybe I can get a job here. I could be the engineer. No, Tom, you're going to stay right where you are. You're not going anywhere for the next 58 minutes, okay? You're going to stay right there. This is live radio. This is Gilbert Talks Taxes. This is WCAB AM 590, FM 100.9. I got here and I said, Tom, I have no idea what I'm going to talk about. And Tom said, oh, you'll come up with something. So all I can do is talk about my week and what happened this week. It's been a very, very busy week. It has been, this is, by the way, peak tax season, tax filing season is right now. We're in the middle of it. So we are, or there will be, in 10 days, corporate LLCs, partnerships, your tax returns are due, or you're going to have to extend. They are due March 15th, okay? And there have been no extensions granted this year. I'm talking about special extensions because of any other things. We are back on a normal schedule, okay? So March 15th, all LLC and all partnership returns are due. Why is that so important that they get out? Because LLC tax returns, 1120 S Corporation tax returns, and partnership tax returns, which is the 1065, those contain a document called a K1. And every partner and every member of an LLC and every partner of a partnership get one of them little K1s. And those K1s have a lot of information on there that they need to file their tax return. Okay? And those tax returns are going to be due April 18th. It was, the normal date is April 15th, but this year April 15th falls on a holiday, Good Friday, so it's been extended to Monday, the following Monday, April 18th. So you have till midnight of April the 18th to file your tax return. Now, what if you can't have your tax return ready, Tom? What if, busy person like you can't get that tax return pulled together, the mountains of paperwork that you have to get me, you just can't pull it together. What do? Tom, what would you do? You would file an extension. But I want to remind you, an extension to file is not an extension to pay. So You file that extension. If you owe money, you think you're going to owe money, you're pretty sure you're going to owe money. And a lot of people are owing money. I don't know. The IRS issues these averages, and I hate to repeat them because it's an average. You know, if somebody owes $1 million and somebody owes $1, the average is $500,000. Well, that means nothing to the guy that owes $1 million and nothing to the guy that owes $1. So I hate to repeat averages, but overall, we're seeing refunds smaller, mostly because of the advanced child tax credit, and we're seeing businesses owing more, mostly because they had a great year last year. They made a lot of money. Again, there's a lot of discussion about just because they made a lot of money doesn't mean they made a lot of profit. That's a whole other conversation. But we're seeing revenues up. We're also seeing expenses up. So there's just a lot going on. But if you think you owe, you need to send a little something with that extension, because if you don't pay with the extension, or at least make a reasonable estimated payment with it, you're going to get hit with some penalties. You're going to get hit with some fines. There's actually a failure to file, failure to pay estimated tax penalty. There's all kinds of failure penalties that we want to avoid. So what I tell people is, we're at the point right now where some people are like, well, I think I'll have it pulled together. I'm not sure. We're going to go ahead and file an extension. You're going to try to come up with a number. Maybe send, if you think you're going to owe, if you're pretty sure you're going to owe, we're going to go ahead and send a payment with that extension. But we're going to try to get at, we're going to try. We are ahead of that curve, because waiting until midnight on the 15th of March is just not something I like to do. We've done it for too many years, and we get enough of those. So we try to get ahead of it and file them, because you can file an extension and still file your tax return timely. That doesn't negate, one doesn't negate the other. And people say, well, just file an extension. Well, do you think you'll be ready? Could you be ready? Can we pull it together? Because it does take time to file an extension. There's a whole set of forms that you have to go through, and it is actually a tax return. That is an extension tax return. So there's a little more to it than just pushing a button, but, you know, we try to look at it. But if you know you're not going to do it, go ahead and get that extension filed. You'll be glad you did. It's just one more thing off your plate. And then what do you have? Well, it's an automatic extension. You have 6 months to pull the tax return together. I have clients that, just because of the nature of their business, a lot of my landscapers, a lot of the people that this is a busy time of the year for them, architects, engineers, people like that, it's just what we do. We file an extension for them. They're too busy to even try to pull stuff together. They usually do it during the summer, and they know where they're at. A lot of them pay estimated taxes throughout the year, so the money thing's not a problem, and it's just what we do. So we try to work with our clients on that. So are we back? Everything's good, Tom? As far as you can tell, everything's good, right? Everything's good. Okay, where nothing needs to be reloaded, restarted, recalibrated. Nothing else, huh?
No.
Okay. You make this look so easy, huh?
Oh, I do.
You make this look so easy. Todd would have broken out in a sweat, and he'd still be pushing buttons. That's the difference between a professional, I guess. I want to talk about, and I got a lot of feedback about Emily. You weren't here last week. Emily, my new EA. Actually, Emily's been working for me for a number of years now, and she just passed her EA exams and got her certificate from the IRS. She is our newest enrolled agent. She actually was on the air last week and did a couple of sections, and I got a lot of feedback about it. A lot of people liked Emily. She was very, very good. They were very excited to hear her. A cheery voice, and she is very cheery. So we're looking forward to really. She's going to come back and do this program with me some more, because I need all the help I can get. And but I'm excited, and there's a lot of things she's working, learning, and plowing through. One of the things that had us very concerned this year was, speaking of the partnerships, let me go ahead and wrap up this section with this. Next year, LLCs and partnerships, you people that receive the K1, there's going to be some new K1 forms. There's actually going to be a K2 and a K3. What the IRS is trying to do, from what we understand, because they don't tell us what they're trying to do. They just do it. We've got to kind of try to figure it out. But what it feels like they're trying to do is shareholder basis. Shareholder basis has always been a problem. And those of you out there that have an LLC or are a member in an LLC or you're in a partnership, you understand what I'm talking about. Your basis in that partnership is your part of the business. And what is your part of that business worth? What is the dollar amount of the value of it? And it can get pretty complicated figuring that out. And when you have multiple partners and multiple members that contributed different amounts of money, it just compounds this. So why is the IRS concerned? Because when one of the partners, for whatever reason, sells their part of the business or gets out of the business or they pass away and their part of the business then goes to their estate, this all affects all the shareholders' basis. And you pay tax on the gain, the increase in that basis when you exit this business, or you get a tax write-down on the loss. So the IRS has been trying to figure out, they're just trying to come up with a good uniform way across the board to figure out, to calculate this shareholder basis. And in prior years, this information's been not easy to manipulate, but it could be confusing. Let me say it that way. And especially when you have partnerships with many, many partners. Now, typically here, my listening audience, what we have is a husband and wife partnership, or we'll have an LLC with some family members, maybe a parent, some children, brothers and sisters, or we'll have 2 or 3 close friends that created this LLC and now it's grown. And they've brought in maybe an investor and they've given him some shares. So now it's no longer that small group of people. Now you have a third person, a fourth person in there. So for most people, calculating this is not that tricky, but it can be. And just some due diligence is required. But next year, there's going to be these new forms. It was supposed to be this year, and I actually I didn't do a whole program on it, but I touched on it in December of last year, one of the last programs I did, and then in January, I touched on it a little bit. The problem was a lot of people didn't know what these laws meant. So they created the law, they said, this is what we're doing, and we all looked at it and said, well, what is it? What are we trying to accomplish here? Because it's just a lot of information that we're putting on these documents. And how is that going to translate to their tax return? Well, it seems that the IRS themselves wasn't sure how this was going to happen, because they totally put all that on hold for a year. But they are going to bring it back next year. So just be aware this is going to be a thing. Have a conversation with your CPA, your EA, your tax attorney. Those of you that are my clients, we're going to be talking about it. We're going to be reviewing these and seeing how this is going to affect everybody. We don't know yet, but it is going to be a thing. Now, they postponed it for 1 year because they thought it was going to be too much for everybody this year, and I agree. It was too much. There were a couple of continuing ed classes that were put together, and some people that attended them came out of the class and said, I'm not sure what I just learned. So it was pretty complicated, these things. So let's take a quick break, Tom. I'm going to come back. I'm going to talk about IP pins, going to talk about the advanced child tax credit. IRS issued a second letter, which was a duplicate of the first letter, and we're not sure why they did that. But then they said they issued an email and told us to tell all our clients to ignore that letter. It was a duplicate of the first letter. So they just did that. That's the 6419 letter. Going to talk about the 1095A is still a thing for those of you that have healthcare.gov, that have health insurance through the marketplace. Going to talk about IRAs and children. Yes, that is a thing. And then I'm going to talk about home rental, vacation home rental. A lot of people here are renting their homes. It's becoming a thing. A lot of people are finding themselves with a second property, and they're renting those. And there are a few things you need to know. Let's go ahead and take a break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
Hi, I'm Sandra. My husband Peterson and I own Precision Detail and Tint. We invite you to come to our new location at 620 U.S. Highway 64, Rutherford, on the corner of Silvers Lake Road and Highway 64. Whether you need specialty detailing for your car, RV, or boat, or window tinting for your automobile, or home or business, we can help you. Voted Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
People come up to me and say, Gilbert, thank you for doing my tax return and thank you for getting me that big refund. Do you have any ideas what I can do with that refund? Oh, yes, I do. Take that refund right over to NC Tractor and Farm Supply, talk to Phil, get you a brand new shiny red Massey Ferguson. That's NC Tractor and Farm Supply, Railroad Avenue. You can call Phil at 828-429-5008. By the way, mention you heard it on Gilbert Talks Taxes. I'm hoping he'll give me a discount when I go buy my brand new shiny Massey Ferguson tractor.
We are back. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. We had a slow start there to the program. We had technical difficulties. Gilbert doesn't know how to hook up a microphone. We had technical difficulties, but we are on the air. This fifth day of March. It's going to be a beautiful day today is what I heard. It's going to be a beautiful day. Our official weather station there is not on, Tom. I don't know what the weather is. I don't know what the temperature is. We had a problem with it. 44 right now. But it's going to be a beautiful day today. So there's just several directions I can go in. Let me talk about IRS letters first, because this has been very confusing. We have gotten a lot of phone calls on this. And I'm telling you, there is somebody at the IRS listening to this program. I have said that before in jest. Just there's somebody because I would say something, and then a week later, somebody would be picking it up. I actually said something. I got the IRS memo that night. Talked about it. Just happened that it came in Friday night. Talked about it Saturday morning here, and then on the following Monday, CNN covered the story. So I was telling Todd, I said, oh, yeah, CNN, listen to me. So probably a coincidence, okay? But this one kind of scared me.
You're streaming.
I'm streaming. They're worldwide. People are calling me from all over the world. www.WCAB59.com. I have actually had people from all over the country that picked this up later. So, yes, Tom, I don't deny that. I don't doubt that for 1 minute. But I talked about last week, and I've talked about it several times, how the first advanced child tax care credits that came out, the first letter telling you about the credits, a lot of people didn't know what it was. A lot of people threw the letter out because it was a weird letter. It was a strange size on this like paper that felt like it was like the kind of stuffing paper you get when you buy something from Amazon, like made in China. And it was this, and it's a tax document. It was a letter, 2419, but it was telling you about your advanced child tax credit. And it was in Spanish on one side, English on the other side, whether you spoke Spanish or not. I mean, so you got this letter, and it was very confusing. So I talked about it on the air several times because people threw the letter out, or people would call me and go, what is this? Is this like, because it looks like one of those letters you get telling you can refinance your house at a cheaper mortgage rate. That's what it looked like, the kind of envelope it was in and everything. So the IRS reissued that letter, and that's the part where I said they're listening to this program. They reissued that letter in a standard 8.5 by 11 format, still in a weird letter. I'm sorry, still in a weird envelope, not the normal. Because this is what happens, is the IRS has their standard letter. that they've used for decades. They have their standard envelope that they've used for decades. Everybody knows what that envelope is when it comes in the mail. It's got that IRS eagle in the upper left-hand corner. You look at that letter, you go, ooh, I better take this to Gilbert. You don't even know. I get them, they don't even open them. They don't want to know what's inside. They just bring it to Gilbert, okay? And we all do that. So we all know what that is. Well, they changed from that format. And they changed that format in a bad time. They changed from that format when there was a lot going on, a lot of mail was going on. So now you're receiving all these letters in these different formats. So they released 3 different letters for the same thing. And now people are panicking, calling me going, I got this letter again. Does this mean I owe this money? Does this mean, are they asking me for money back? What does it mean? They don't understand. And isn't this the same letter I got? It's the same information I got 2 months ago. Yes, the IRS said to disregard that letter. So at what point can we pick and choose what letters we're going to disregard from them? The whole thing's just very, very confusing. So if you got this letter that is saying, giving you your advanced child tax credit, the dates on the letters are they're all over the road, but most of them were issued in late February, which is outside of their normal mailing time. Everything was supposed to be in the mail by January 31st. That is, as a matter of fact, that's law. These letters went out with dates of February 12th, February 21. I don't know if any have gone out with March dates, but it's been wreaking havoc, Tom. I like saying that, wreaking havoc with people. And a lot of agents didn't know what to do. I was getting phone calls from other CPAs and other agents asking me, what does this mean? So pretty much if you did your tax return and you put that information on there, it's on there. Now, the other thing I want to say about that, we've had a lot of people come in and I ask them, okay, you got this letter, because to add to the confusion, what they did is they made, so if you got, I'm just making a number up, okay? If you got 3 children, you got $5,100, okay? They wrote one letter to the husband, giving him half of that, $2,550, and in the other letter to the spouse, $2,550. So this confused people even more. And then people would say, well, I didn't get that money. I never got that money. I'm like, are you sure you didn't get them? Oh, yeah, didn't get that money. Never saw that money from the IRS. Well, they would have sent you, they made these payments out over 6 months. So you had it in July, August, September, October, November, December. Most of the deposits were made on the 15th, although in the beginning there was kind of hit or miss. Some were a week late, some were 2 weeks late, but then they made it up. So some people got these payments like 2 in a row, back to back, a week apart. Oh no, never got it. Well, do you use a bank app? Yes. Let's just go ahead and log in and let's take a look at that. And then when I see it, I'm going to say, IRS. Right here is the money. Oh, that. Oh, that money. Oh, that. Is that what that was? Yes, that's the $5,100. So we've had a lot of that. If you get this letter and you don't think you got that money, you can do 2 things. Number one, was it deposited in your bank account or did they send you checks? 1 or 2. So if they deposit in your bank account, get bank statements, go to your bank, look on your app, do whatever you need to do, but try to confirm that you did or did not get that. Because if you put it on your tax return that you didn't get it and you did, it's going to slow up your refund. It's going to slow it up a lot. We've already seen it. We've already seen people that should have gotten their refunds 2 weeks ago, 3 weeks ago, nothing. And it says when you go to where's my refund, it says it's still being processed. Whereas everybody else gets either, received, processing, whatever. So please be aware of that. Same thing with the stimulus. Check your stimulus. There were 3 EIP stimuluses. The first one for $1,200 or $500 for dependents. The second one for $600. Third one for $1,400, which was a lot for people that had 6 or 7 members in a household. Some of these payments were very big. And the same thing there. They're going to send you a letter, and if it's married filing jointly, 1 letter is going to be to the husband, 1 letter is going to be to the wife, and it's going to have the amount split. Okay, is there anything else I need to say about this, Tom? No, we're good with that? Okay. Yeah, I'm asking Tom. Tom is my sounding board. I'm glad I have a person here, Tom, so, because I can't see the listeners. The other thing that is important is Obamacare, healthcare.gov, ACA, whatever you want to call it, Affordable Care Act, which has been everything but affordable, has caused healthcare to be everything but affordable. Affordable Care Act. Those of you that are receiving subsidized insurance payments, we still need Form 1095A from healthcare.gov. People have not been bringing those. People don't know that that is still a thing. Or a lot of new people that are getting healthcare through the exchange, they're not telling them that you've got to have that form to your tax preparer. What's happening this year is now the tax return will reject right away if we don't have that form. In prior years, we would e-file your tax return, and we would know, because we ask people, did you have health care through the exchange? Oh, no, didn't have health care through the exchange. That's another one of those, like the deposit. Oh, that. Was that what that was? We tell them, did you have health care through the exchange? No. Didn't have health care. Do you receive subsidized health care? No, I don't receive subsidized health care. We file the tax return, and then they don't get their refund for 4-6 weeks, and then they get a letter saying we can't process your tax return because we need your 1095A from healthcare.gov. And the problem isn't a taxpayer problem. The problem, I really think, is that at healthcare.gov or your insurance agent that you got it from didn't explain it to you. That you actually, even though you bought it through an insurance agent, it actually came through healthcare.gov. It came through the exchange. So people say, oh, no, I don't have healthcare.gov. I don't have Obamacare. I have Blue Cross Blue Shield. I have Cigna. I have whatever. No, you have it through the exchange. You just don't know it. So it was a communication error, and a lot of people don't realize this. So this form is a thing. But the question you have to ask yourself is, how much is your health care costing you? If the agent told you, I can get you a reduced policy based on your income, right there, that is your first warning. That is the first red flag that you have subsidized health care. I told the story about the lady who was emphatic. I've told the story before. She was emphatic. I do not have Obamacare. I wouldn't get Obamacare. I don't want Obamacare. And I said, I'm sorry, ma'am, the IRS is saying you have it. I said, well, how much do you pay for health care? Oh, I pay $50 a month. You pay $50 a month for health care? Really? The average going rate's like $700, $800 a month. In fairness to her, she had worked for 40 years at a place that paid for her health care. She had no idea what health care costs were or what it even was. As a matter of fact, she thought $50 a month was kind of expensive. She thought it was, she couldn't understand why she was even paying that for health care. And she had like a gold tier plan because she wanted a low deductible, and her agent got her this. It was like really good insurance. I told her, I said, yeah, she was being subsidized about $10,000 on that. So when we finally got them on the phone, which is, what do you do if you didn't get your 1095A, which I've got to have? You call the exchange, the marketplace, healthcare.gov. You call them. They will give you the information over the phone. They can't email it or fax it to you, but they can give it to you over the phone, and then they can mail you a hard copy. The reason I try to get it over the phone is because I can go ahead and do your tax return. So what we typically do is we'll call them with you. I have a blank 1095A. They'll give me the information. We put it in there, and then they'll mail you a hard copy. Just keep it for your records. You're supposed to be able to go online and download it, but what happens is a lot of people bought these plans through an insurance agent, and they didn't create the account. So they can't, there's no login. They don't know how to log in, and they can't access their account. Because as far as the computer is concerned, as far as the server is concerned, they're not the rightful person to log into that account. So that's been the problem. So you need a 1095A. You're supposed to get it in the mail. A lot of people didn't. We don't know why. They haven't given us a good reason why. They just said they don't. But they can go online and log in and create it. So it's kind of we go in an endless loop on that one. But we can call them on the phone. You can actually get an agent. They're there on Saturdays, and actually they're very friendly people. They usually right away give you the information. So it's about a 10-15 minute phone call, and you get it out of the way. Speaking of 10-15 minutes, let's go ahead and take a quick break. It's time for another break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.
This is Christy Carmona, and tax season is here. Gilbert and I prepare all tax return forms. Personal 1040s, corporate 1120s, 1120Ss, partnerships, estates, trusts, and not-for-profit returns. From the simplest returns to the most complicated returns, we are committed to quality, secure, and personalized service. We have 2 locations, one in Rutherford and one in Tryon. So call us today at 828-289-9300 to make your appointment. And new for this year, we have with every 1040 personal tax return, it includes at no extra cost $1 million of tax audit defense and ID protection. So call us today at 828-289-9300.
This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherford. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you. I want to tell you about another great local business, Forest City Concrete and Grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City Concrete and Grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you.
We are back. WCAB AM 590, FM 100.9. Those of you live streaming, I am here live in the Blue Room wearing my vintage. I am wearing a vintage Nautica. It looks very nice in the Blue Room. I try to coordinate to the Blue Room, Tom, just so you know. Right here. Now, we got off to a bad start there. I wasn't prepared. It's all my fault, so I didn't give my information out. I am Gilbert Carmona. I am an enrolled agent, a person enrolled with the IRS. Now we have 2 enrolled agents to better serve you. If you need to make an appointment for us to do your tax return, 828-289-9300. It's been an unprecedented volume this year. By the way, this is the first year, according to to our association, this is the first year that people that what we call the do-it-yourself market, people that go to use online tax preparation. Dare I say the name of the competition? Dare I say TurboTax? People that go online and use TurboTax. This is the first year that their volume has decreased. Their volume is down. They call it the do-it-yourself market, the DIY market. They're saying that has gone down. People are turning to professionals, and we're seeing it. We're seeing a huge spike in new clients because all these new tax laws. It's very complicated. One man said it the best when he came into my office. He said, I didn't even understand what they were asking me. The questions they were asking me. He goes, I didn't even know it. He tried several different things, and one said he owed $4,000. Another one said he owed $2,000, and he said, I better pay and have somebody do my tax returns. Our base rate starts at $125 for a basic tax return, and it's up from there, depending on what you have, how many forms you do, and all that good stuff. That includes the federal, the state, one state. If you work in multiple states, that's a little more. Child tax credit, EIN, all these other things, and self-employed tax returns are a little bit more. So we just start from there. But we are taking on new clients, and we are ramping up for volume. We've seen a definite increase, and we're hearing it from people. They just don't trust doing it themselves. And again, they don't. It's just it's beyond it's beyond what most people can even comprehend. Also, this year I received news is the last year. This is how complicated it's getting. This is the last year State Employees Credit Union will be doing tax returns. They used to do them simple tax returns for free for people. And then they were realizing it was taking a lot of time and they were spending a lot of money to do this. So they started charging, and it was like $50, and then it was $75. I don't know what it is now, but I had somebody just come and tell me that they work in South Carolina, live in North Carolina, so they actually have to file 2 states, which is very common for around here. Very common. A lot of people work down at BMW, work for those businesses around there, so we do this a lot. It's not complicated. It's just there's a few things to know and a few things to do it correctly. State Employees Credit Union is not doing multi-states this year. They're only doing North Carolina returns. It's what I've been told. You State Employees Credit Union people, call me if I'm wrong. But I definitely know this is the last year they're going to do it. So we welcome you, State Employees Credit Union clients. We'd love to be able to help you. In prior years, I've actually gotten quite a few of them because as they ramped up and changed things, they don't do complicated returns. So as soon as people had like inheritance income or brokerage income or something like that, they'd come to us. And we've kept them as clients over the years. So they've been great clients. State employees, credit union people have always been good people to work with. Give us a call, 828-289-9300. You can send us an email, gilbert@gilberttalkstaxes.com, and we'll get back to you. The best thing to do is, though, call up, make an appointment. If you can't get in for whatever reason, we do have an online process. There is a way you can upload your documents to us using our secure portal, very secure portal, and we can even arrange for e-signatures and all those kinds of things to happen. Again, the telephone number is 828-289-9300. What direction to go in now, Tom? Let me talk about, remember I'm the guy that didn't know what he was going to talk about. Okay, we have exactly 23 minutes left? Is that correct? Yep. Okay, 23 minutes. So what can I talk about in 23 minutes? I catch my breath in 23 minutes. I'm going to talk about investments. Let's get into investments. We're talking about investments, and I'm going to talk about home rentals, the 2 topics I am definitely going to talk about before the end of the program. Investments. And we'll talk about investments for children. I have a lot of grandparents come in. I am a financial planner. Those of you that know that I was voted Rutherford County's best financial planner. I don't really, somebody told me, you don't plug that enough. 2021, I got it again. I got it in 15, then I didn't get it again until 19. I got it in 2020, 2019. I got it in 2015. Now I got it again in 2021, and I thanked everybody that voted for me. Thank you very much. That really meant a lot to me. Best of Rutherford County, best financial planner. So I am a financial planner. I'll have a lot of grandparents come in, or parents come in, want to do something for the children. Typically, I'll have grandmothers that want to maybe invest something, do some gifting. They're wrapping up their estate, and they want to do some gifting. There's a lot of confusion about what gifting really is, because a lot of people think that if they gift money, it reduces their taxable income. No, it does not. Gifting is more of an estate strategy. And I can do a whole program on just gifting and what it means. But it's the giver, the donor, that pays the tax. You don't get a tax deduction for gifting. But what happens is you can gift money tax-free to you. It reduces your estate. And that's a whole strategy. But I'll have parents, grandparents, uncles, aunts that want to, even a great-grandparent, that wants to give some money to the children. And they'll come to me and they'll talk about a 529 college plan. Or they'll talk about they want to buy the grandchildren some stock, whatever, Disney stock, or they'll want to buy something like that. And these are all good ideas. Again, we have a meeting and we discuss this to see what is best for you, what is best for your situation. So I'm not giving any advice here, and I'm not giving any specific products. but grandparents will be drawn to, there's Gerber insurance products. There's many products out there, and they'll come and they'll want to do something. A lot of business people will want to do something for the children. And I've talked about, if the children work for you, if the children are getting W-2 income, okay, if the children are having any kind of taxable income, there is something that's really overlooked a lot, and a lot of people don't talk about it. And it's actually great. If you have a business, or if you have a child that's actually got income from work, they can actually open up an IRA. Now I know why a lot of people don't talk about it. Okay, an individual retirement account for a child that's not even going to retire for another 50-something years? Yes. Let's say you have a teenage child that is working for the family business and is actually making some income, which that is a whole other strategy. Because don't forget, because of standard deduction, they're not going to have any taxable income till they get over that standard deduction. So that is a strategy for the business, and there is no age limit for hiring these children. There's a reasonable age limit. It's hard to justify putting a 2-year-old on payroll. Okay, but if they're at an age that they can actually work in the business, and they do, putting them on payroll is a smart thing to do. And again, this is a conversation we have to have, see if it's right for you and your business and this child. But you can put them on W-2 income, and you can open it up an IRA for them. Now, not a traditional IRA is what I'm talking about, but a Roth IRA. This makes a lot of sense, and this can actually be an answer if you want to set something up for a child that's really going to have a long-term payoff. And it doesn't have to be a huge investment. Okay, so I'm just going to hit some of the highlights of what you need to know. But let's start with the Roth IRA option. Okay, the only federal income tax law requirement for a child to make an annual Roth IRA contribution is to have enough earned income during the year to cover the contribution. That's all. So whatever their earned income is, they have to have enough to cover the contribution. Age is irrelevant as far as the law goes. There is no age limit to open this. So if a child earns some cash, let's say it's from a summer job or a part-time job, or they're working for the family business, as I said, they're entitled to make a Roth contribution for that year. For both the 2021 and 22 tax years, your working child can contribute, now this is the brackets now, they can contribute the lesser of his or her earned income for the year, or $6,000. So they can contribute right up to $6,000, so it can be 100% of what they earned, up to the $6,000. Okay, standard deduction being at $12,000, over $12,000, before they have taxable income. And with what the wages that are being paid today, I am actually seeing W-2s from high schoolers that are $7,000, $8,000, $9,000. Oh yes, because no job's paying less than $15 an hour, $15, $16, $17. I mean, some of these basic jobs are paying. Starting wages, $14 and $15 an hour. So even if they work just a full-time summer job, and they're clocking in, 800, 900 hours, 600 hours, you're seeing 9,000, 8,000, which is surprising to see these numbers go up. Now, there's an income restriction on the right to make annual IRA contributions. I don't want to get into all these numbers because it's just very confusing about what they can make. So the child can use his or her standard deduction to shelter. I already said that, up to $12,000. Actually, standard deduction right now, 2021 tax return is $12,550. So we're sheltering the income tax. Now, this is not self-employment income tax. This is W-2 income tax. Self-employment income tax, if the child has a 1099 or the self-employment portion of the W-2, but that's okay. That's another number. That's the 15.3%. But so this is a thing that can be done. And if people say, well, but what if the child can only put $2,000 or $3,000 in it? So I crunch these numbers just to give you an example that even a modest contribution, even a small contribution, can add up over many years. It's that wonderful thing called the time value of money. Remember compounding interest that the credit card companies used to soak you? Well, that can work in the opposite, the other way around, when you're investing and reinvesting the money in these Roth IRAs. And why I say Roth IRA for a child is because the Roth rules are this. You don't get a tax break when you put the money away. Okay, this doesn't reduce their taxable income. We don't want it to. You're already part-time. You're already under that standard deduction threshold. You're not paying income tax. You're already below that. I don't want a tax break now. Whereas if you're older, an older couple, you want to open up an IRA. When I say older, in this scenario, I'm talking about 20s, 30s, and 40s, okay? You're older than that. You want to open up a traditional IRA may be the way to go. But the younger you are, these Roths, where does the break come in? When you take the money out. You don't pay any tax on the gain. And the way the stock market has been, the way things have been going, the appreciation has been huge. Okay? Just huge. That's why we even have a lot of people doing Roth conversions. They're converting their traditional, they're converting, that's a mouthful right there. Roth conversion. They're converting their traditional IRAs into Roths. So I crunched some numbers. Let's say a 15-year-old contributes $1,000 to a Roth each year for just 4 years. And let's assume, and this is an assumption, okay, 5% annual rate of return. That's all they did, $1,000 for 4 years. The Roth account would be worth $33,000 in 45 years. So when that child is 60 and that child's now looking at retirement, that Roth account from 45 years ago that he just put $4,000 into would be worth $33,000. Okay? Now that's at 5%. The stock market's been doing better than that. Let's assume it's 8%. That Roth IRA would be worth $104,000. That person would be taking out, and they're going to use the two words that I love to hear, tax-free. Not tax-deferred, tax-free. So that child is pulling out $100,000. Well, not a child anymore. That person going into retirement is going to have $100,000 tax-free. And that's at $1,000. They can do up to their income amount or $6,000. So $2,000, $3,000. I've shared this story before. I've got many that have done this, but there's one in particular I always think about. She didn't know where to start, and I said, "What can you afford?" She said, "I can afford $100 a month." I said, "Great, let's do $100 a month." I set it up so it comes out of her bank account, $100 a month. Years went by. She comes in. We're doing her tax return, and she says, "What's this account I got?" Because it's on auto. It just comes out of her bank. She says, "What's this account I got $25,000 in?" I said, "Oh, that's your IRA I set up for you." She said, $25,000? She said, "I'm just putting $100 a month in it." I said, "Yeah, but it's been a few years now since we've been doing that. And you've been consistent about it. You haven't touched it. You just kept that money in there, and it just keeps reinvesting." I said, "This is what happens." So it works. And if that same child contributes just $2,500 for 4 years, $2,500 a year for 4 years, we're going to assume that 5% again, that's $82,000 tax-free in 45 years. At 8%, it would be $259,000. Okay? So if this is worth having this conversation, if this is something you're trying to do for a child, you've got a child that's working or is on your company payroll, give me a call, 828-289-9300. We can talk about this some more. I'm going to go ahead and take the last break, come back and talk about vacation home rental. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities,
decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business.
This is Kimberly. If you owe the IRS for prior years or you have unfiled tax returns, don't call those national toll-free numbers. Affordable, secure, and local help is available for you. Call Gilbert at 828-289-9300. Gilbert is an enrolled agent permitted to practice before the IRS. Taxation is his specialty. He knows the latest laws to help you with your problem. Avoid garnishments, levies, and liens. All initial consultations are free. Call Gilbert at 828-289-9300.
We are back. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. Those of you live streaming. And I've got to say hi to David. He's my faithful live streamer, or at least he emails me and tells me so. And I've got other people that pick it up later during the day or go back and watch it. Got a phone call from somebody that watched it online Thursday night. I thought you watched it Thursday night. So thank you for live streaming. www.wcab59.com. Again, my telephone number is 828-289-9300. I do have two offices, 113 Whitesides Road, right here in Rutherford, 10 and 226 South Trade Street in Tryon. The beautiful Art Deco building, Tom, right off the historic downtown Tryon. Okay, let me wrap up this program with vacation home rental, or just vacation, just rental properties, period. There's a few things I'm just going to get into, because there's actually some strategies you can do here to reduce your taxable income, because the whole thing is about reducing your tax load. Okay, legally, we tax avoidance. Tax avoidance is actually not illegal, Tom. It's actually in the tax code. It is, you actually have the right to figure this stuff out, and there are ways to do it. There are ways to do this that can be done very simply. So vacation home rental. A lot of people around here are actually renting properties they're inheriting. Typically what I'm seeing is the parents will pass away. A couple of the children will inherit the house. They don't really want to sell the house. They're, for whatever reason, like to make some money from it. Long-term rentals can be a struggle. Long-term rentals can actually be problematic. We are in an area, though, a part of the country where a lot of people come to vacation, and a lot of people come to just spend some time. They could be a couple of weeks. It can be a few days. The Tryon Equestrian Center has brought a whole new clientele here. Of course, the mountains, and in the fall, anybody who's had any rental property knows how that is. And now, this is not new to people in Lake Lure. They're used to it, especially people that are actually on the lake or people that are up in the mountains there. But a lot of other people are discovering this. So, how do you report that income? Especially if you use Airbnb or Vrbo or any of these other apps, these other computer-based scheduling services to get news out of your rental. They will give you tax documents. So this does get reported to the IRS. If you're using Square for invoicing, or PayPal, or Venmo, or any of these other apps, you know that's all been in the news lately, where they're now going to have to start reporting lesser amounts, and they're reported to the IRS. There's actually a strategy for doing this, because that vacation rental, and again, we need, this is a conversation. I'm just making you aware of what the tax code says on this, and that you do have some options. This isn't a straight up thing, and how much rental you're doing, what type of rental you're doing. So, we would have a conversation of what's best for you. So what is best for you? You're going to report that income on your tax return on either a Schedule C or a Schedule E. Now, a lot of people will call up and say, I want to create an LLC for this rental property. Should I do that? Well, maybe. That's not always the best thing to do. For a lot of people, there's no need to do that. You're just wasting money creating the thing, paying the annual fee on it, because on an LLC, you have to renew it every year. That costs $200, and if you pay online, there's a $3 fee, so $203, and you have to give North Carolina Department of Revenue an additional $200. So there's $400 right off the bat. And if it's a modest rental, you're just trying to make a little extra money, why give money away? There's really no other benefit unless you have multiple rentals, and again, we can have a conversation about this. But if you just have one rental, or you're renting your home, there were a lot of people in Asheville doing this until the city of Asheville said if you're within city limits, you can't do short-term rentals. And before that, what was happening is a couple of family members would get together, and one of them would rent their house out for the weekend and then go move in. Him and his whole family, dog, cat, bird, everybody would go move in with the other family member, and they'd rent the house out for like Friday, Saturday, Sunday. And they were getting unbelievable rentals for the weekends, especially during the holiday, the leaf season, the fall, the spring, or any of these events that they have downtown Asheville. People were making incredible money doing this. And so they were renting out their own homes. And it was fantastic. And don't forget, with Vrbo and Airbnb, there's the built-in insurance policy. So if your house gets damaged, you make a claim to the insurance company. So they were doing it, and it was working out great. So that tax return, that income, gets reported on either Schedule C or Schedule E. Now, which one do you use? Okay. This is where the strategy comes in. If you show a tax loss on your rental property, which can happen, Schedule C is a good choice because it allows you to deduct your rental property against all other incomes, and there's no limit. Okay? So now this is assuming you materially participate in the rental property. This is a whole other conversation, but this could be a good option. So if you show taxable income on a rental property, Schedule C is not a good choice because it causes you to pay self-employment tax. That's the big difference. Is Schedule E a good choice? If you show taxable income on a transient rental, Schedule E is the best because you don't pay that self-employment income tax. But if you're showing a loss on your transient rental and you materially participate, and there's some rules about that, you can deduct your losses against all other income, but those losses have limits. So these are the rules, and there's quite a few rules. I actually have a handout I can send you if you send me an email and ask for it. I will send it to you. Schedule C or Schedule E on your individual return. How much time's left there, Tom? I don't want to go over. Yeah, and that's okay that I missed 3 minutes in the beginning. Let's go. Now, there are services that you can render